Welcome to Addicted to Real Estate TV. On today's episode, we're going to talk about stocks versus real estate. And I'm going to give you my opinion of why I think real estate rocks compared to stocks. So stick around and let's have some fun.
To say you gotta know somebody, or know somebody to get somewhere these days. To say you know that's alright, yeah that's alright, cause you know that's alright with me. Yeah, you know that's alright, yeah that's alright, cause you know that's alright.
I'm Phil Falcone, your host of Addicted to Real Estate TV. Today's episode was sponsored by Executech Suites. Do you have a voicemail system answering your business phone calls during the day? Oh, please say it isn't so. That does not present a professional image for your company. Check out Executech Suites. They have real humans answer your phones during the day and patch the calls to you no matter where you are. So today we're going to discuss stocks versus real estate and why I think real estate's better. So let's get started. You have $100,000 to invest. So let's just say you were going to put it in stocks. How much stocks could you buy for $100,000? I think the answer is pretty simple. It's $100,000. Now I know some of you out there are saying, well, wait a minute, you could buy stocks on margin. Come on, man. We're talking about investing here. We're not talking about gambling, all right? Stick to the subject. All right? Your $100,000 buys you $100,000 worth of stocks. Done. How much real estate could you buy for $100,000? Typically, today's market, 20% down, you can buy a $500,000 building, right? Okay, so by using leverage in real estate, I can buy an asset that's worth 5 times the amount of money that I have. My partner, the bank, is putting up 80% of the money. And guess what? They don't get to share in the profits. I don't know about you, my friends, but that's a beautiful arrangement, any way you look at it. All right, let's go to the next subject. How much is your $100,000 worth of stock worth the moment that you buy it? It's not a trick question. It's worth exactly $100,000. When you buy stock, you're buying it at a moment in time. It is worth exactly what you paid for it, and there's not really any way around that. So, end the topic. What about real estate? Well, real estate's all over the place. Is it theoretically possible that you could buy your $500,000 building and it's really worth $350,000? Sure, that definitely could happen in real estate. So you better know what you're doing. But guess what? There might be a lemon-proof system in place to make sure that doesn't happen. Because before the bank lends you 80% of the money, they're going to force you to get an appraisal. Any appraiser is going to come out and look at the property, and he's going to say it's worth $350,000. You're going to get rejected for that loan. So technically speaking, while that could happen, chances are it won't. Real estate sort of has a lemon-proof system in place to make sure you don't make that mistake. So what about, is it possible that the building you bought for $500,000 is really worth $700,000? Absolutely. You know what's going on today? Are you paying attention? I mean, I'm constantly buying buildings significantly below what the real market value is. So I would say that there's a tremendous opportunity to do exactly that. All right, let's move on. You bought your $100,000 worth of stock with your $100,000. What can you do at this moment to increase the value of the stock you purchased? I'm sorry, my friends, nothing I can think of. You could pray, you could wish the company well, you could write a letter to the board of directors and tell them that you're there to support them as any way they need it. Quite frankly, there isn't much you can do, is there? Now, what could you do to make a piece of real estate worth more money? Oh, I'd need an hour-long video to go over that. You could paint the place. That's right, paint the place. And if you don't believe that you can paint a building and make it worth 10% more, you haven't discovered one of the most amazing things about real estate. You can fill the building up with tenants, causing it to have more income coming in. Real estate's a business. If it makes more income, it's worth more money. That's the easiest way to make it worth more money. Do landscaping, take care of it, put energy into it, okay? Try to make the place rock, all right? You put your hard-earned money into it, right? Now put some energy into it and make it work. There's a million things you can do to make a piece of real estate worth more money. Okay, let's keep going. Let's just say, for example, that your stocks that you bought, your $100,000 worth of stocks, has doubled in value. Okay? You've done very well. Congratulations. Now, what can you do to take out that $100,000 worth of profit that you just made? Not much you can do, except sell it, right? You got to sell it. But that's sort of counterproductive, because the whole reason putting my money in the stock market in the first place is I wanted to be an investor. Now, I'm not an investor anymore because I just sold my stocks. And I've also created a $100,000 gain on that money, and now I'm going to have a taxable situation. Boy, something sounds very counterproductive here. Now I owe the government how much money? $40,000 on the $100,000 I just made. Okay, now let's go to real estate. Let's just say that the $100,000 you bought a $500,000 building that was really worth $600,000, and now that $600,000 building doubled in value to $1.2 million. You're doing pretty good, my friend. What could you do to take advantage of some of the profit that's in your new $1.2 million building? How about refi it? Yeah, refi the building. You go to a bank, you say my building's worth $1.2 million, they get it appraised, and guess what? You can borrow against the equity in your building. What an amazing thing. Would you sell the building? Oh, please tell me you're not going to do that. That would be the dumbest thing you could do. If you were going to sell it, you would sell it and take that equity and 1031 it into another building, but that's a video for another day. The point to all this is you can get the money out of the real estate easily, and you can do it in a way where you don't pay any taxes. We don't want to help the government out. We want to keep it for ourselves and invest it in other things. So let's summarize real quick. With real estate, you can utilize leverage when you buy. And when you buy something, you can get it under value, and you can't do that with stocks. And when you improve it, you can increase the value of your asset, which you can't do with stocks. And you can refi to get out of it. So, in my opinion, real estate versus stocks, real estate rocks, baby. It just kicks stocks' butt. I want you to think about that next time you're planning to spend a little money on something. My name is Phil Falcone. I wrote a book called Addicted to Real Estate, Why I Can't Stop and Why You Should Start. And if you like this little explanation, which is really simple, but it cuts right to the chase and tells you what you need to know, my book is chock full of ideas like this, so check it out. You can check it out at the website below, addicted2realestate.com. My name is Phil Falcone, and thanks for watching.